Where are the biggest growth opportunities in alternative investments and how to approach sustainability and alternatives? To find out, come join us in discussing with investment experts across the field, all the way from private equity to forestry, real estate and beyond. Stay tuned. In this episode, we will find out what the market outlook is for private equity investments. Together with me, I have Evli's own private equity expert, Ben Wern. Ben has been working in the finance field from the late 80s and with private equity assets for the past 17 years. So great to have you here, Ben.
Thanks, Petra.
So starting off with the question of why, what would you say are the key reasons for investing in private equity and what added value can it bring to an investor's portfolio?
So firstly, adding private equity to your portfolio is obviously hopefully reducing the volatility in your portfolio, but actually adding also to the performance of the portfolio. Studies show that historically private equity has clearly outperformed the public markets as well. So it's a good benefit to that. I think the 60-40 model, which says that you have 60% equities and 40% in debt, is a bit broken, the model as well. So to add private equity into there is obviously a win-win if you get lower volatility and better returns as well. So that's really the key point. Secondly, many of the companies feel that why list themselves? The value creation on the private side is more tangible. Many companies feel that they don't need to be listed, not to get exposed towards the quarterly kind of market timings. So the value creation model actually works extremely well for many of the companies, and hence private equity is taking a share from the public markets as well. So if you want to get exposed to that part of the market, getting into private equity is obviously a key point. And I think really, lastly, private equity is a long-term game. So if you want to have sort of less exposure towards the choppier markets, that's a good place to be. So a win-win for everybody.
Yeah, perfect. And how do you see the current market situation affecting private equity assets? And what are the key reasons for private equity performing relatively stable compared to some other asset classes?
Sure. So, 2022 has been a choppy market, as we all know. We've had rising inflation, interest rates, supply chain issues, problems with logistics and so forth. If we look at the private markets today, probably the ones been mostly hit is venture, smaller companies, loss-making technology. On the other hand, probably in the bigger end, the bigger companies that have been partly listed as well, which are taking sort of a hit from the public market volatility as well. So you need to steer in that market as well. The way we look at it is that we focus on the lower middle market and the middle market buyout companies, which have a sort of a strong position in the market. They tend to be market leader in their niches. They have good pricing power, which is obviously key in the current markets. And they've been, very resistant towards the market choppiness as well. Yeah. I think the key point why there's an outperformance is obviously relates to what I mentioned earlier on, the private equity governance model. You have the owners close. You have all the resources required to help the companies to steer through the difficult times, whether that's going to be price increases or reducing cost or getting human resources in trickier labor markets as well. So the private equity model really works in the current environment extremely well. But it has to be said that we're not immune. We will be affected one way or the other, but it's really key to understand it is a long-term game. It's a restricted time horizon. Usually value creation happens in 3 to 4 years from the acquisition, and that's really the long-term game that you should look at. So, I think those are the most important components why we like this space and why it's actually a good place to be today.
Makes sense. And Ben, given your wealth of experience from the field, what kind of advice would you give to someone considering investing in private equity?
So firstly, don't time the market. I don't think you should time the markets in the public markets either, but here it's really impossible. Many of the funds that we invest in have a 5-year investment period, so many things can happen over those 5 years. Interesting enough, though, funds that have raised just before recessionary environments have actually done extremely well because you can actually adapt to different scenarios as well. But again, don't try to time the market. Use all the modeling tools that you have available for understanding how you build up that portfolio. Diversify. Diversification is a free lunch here as well. And make sure that you diversify to different, each other complementing strategies. Do a global strategy as well. Make sure that you diversify on different vintages as well. So, building a 15 fund strategy over 3 years is a good thing. Don't over-diversify. That's really, really important. Use the help of external advisors. I think that's good advice. Many have tried to do that directly. But there's 3,500 funds out there every year fundraising, and you need to be super selective in that market. So, our advice is really to make sure that you have the available help there as well. And hopefully by that, you then have a portfolio of private assets that you can sleep well over, even in choppy times.
Yeah, very good points, thank you. And finally, talking about the sustainability angle, so how do you see ESG in private equity, and are there possible differences across markets?
Yeah, we focus on the developed world, so ESG has been obviously in the focus for decades as well. Europe tends to be ahead of the curve, particularly in Northern Europe, but US is following suit as well. I think we as investors are actually demanding more on the ESG front from our managers than previously, and that obviously is a good thing to do. We try to help some of our weaker GPs through side letters and different kind of actions to make sure that they improve on the ESG front as well. I think today the biggest weakness on the ESG front is still how do you sort of adapt that ESG policies down to the company level as well. Make sure that it's on the board agendas of every single company, because ESG is good business, and that's really the key part that we also stress to our managers. But there's a good buzz around ESG and private equity.
Yeah, I think that's a very good point on the importance of actually integrating ESG all the way across the portfolio companies themselves to then create value over the longer term.
I agree.
Thank you so much, Ben. This is all for our part today. However, we will be back soon, next time talking about investing in forestry, together with our portfolio manager, Roger Naylor. So stay tuned. This is Evli.